BOJ rate hike alert. Japan-US trade deal clears path for policy shifts. The recent trade deal between the United States and Japan has removed a significant hurdle for the Bank of Japan, BOJ, to raise interest rates this year, signaling a potential shift in the central bank's cautious stance. Sources indicate that the BOJ may start to soften its gloomy economic outlook, hinting at a rate hike by year-end. However, this development is far from a foregone conclusion. The timing of any rate hike remains uncertain, as the Japanese economy faces a delicate balancing act in navigating the impact of U.S. tariffs. While the trade deal has cleared a significant obstacle, the BOJ's decision to raise rates is far from a slam dunk. The central bank must carefully weigh the economic data, particularly the upcoming October Tankan survey and regional meetings, to gauge the true impact of U.S. tariffs on the Japanese economy. But here's the twist. Some experts argue that even with the trade deal, the economic outlook remains cloudy, with U.S. tariffs still poised to shave 0.55 percentage points off annual GDP growth. Will the BOJ's next move be a cautious step forward or a cautious retreat? The BOJ's cautious approach to rate hikes stems from concerns about the fragile state of the Japanese economy, which has been plagued by tepid consumption, rising living costs, and a weakened manufacturing sector. The central bank's previous growth forecasts were slashed in May, citing the lack of clarity over Japan's trade talks with the U.S. as a key factor. However, with the recent trade deal, the BOJ may start to offer a more optimistic outlook, potentially tweaking its risk balance view on inflation and revising its inflation forecast upwards. As the BOJ navigates this delicate balancing act, we're left to wonder, will the trade deal truly be a game changer for Japan's economic prospects, or will the lingering impact of U.S. tariffs continue to cast a shadow over the central bank's decisions? Share your thoughts in the comments below. Do you believe the BOJ is poised for a rate hike, or will caution prevail? U.S.-Japan trade agreement. No urgent need for interest rate hike. In the wake of a significant trade agreement between the United States and Japan, a notable statement emerged from the Deputy Governor of the Bank of Japan, Shinichi Uchida, who emphasized that there is no immediate urgency to increase interest rates. This declaration came shortly after President Trump made the announcement regarding the trade deal, which has sparked considerable interest and debate. On July 22nd, President Trump took to social media to reveal that the U.S. and Japan had reached a trade agreement that includes a 15% tariff on Japanese goods and a substantial investment of $550 billion from Japan into the U.S. economy. This tariff rate is notably lower than the previously proposed 25% that was set to take effect on August 1st. Trump highlighted that under this agreement, Japan would invest heavily in the U.S., with American businesses expected to reap 90% of the profits generated from this investment. He also claimed that this deal would lead to the creation of hundreds of thousands of jobs in the U.S. Furthermore, Trump pointed out that Japan would be opening its markets to various products, including cars, trucks, rice, and certain agricultural goods, while agreeing to impose a reciprocal 15% tariff on U.S. exports. Following Trump's announcement, a Japanese government official expressed that Japan welcomed the outcome, attributing this success to the diligent negotiations led by Ryo Akazawa, Japan's Minister of Economic Revitalization. While some officials acknowledged that the specifics of the agreement were still somewhat vague, they viewed the achievement of a deal as a positive step for Japan-U.S. relations, which could help alleviate public concerns in Japan. However, they also noted the importance of monitoring the Japanese industry's response to the 15% tariff rate. In his speech, Uchida refrained from commenting directly on the trade agreement, but indicated that he is closely observing the potential impacts of the tariffs. He acknowledged that the economy is currently facing a very high degree of uncertainty. Uchida remarked, "It is not entirely clear how trade negotiations between jurisdictions will evolve. The data regarding both domestic and international economic activities, price trends, and the trajectory of global financial and capital markets remain ambiguous." Having served as a monetary policy operator at the Bank of Japan for over a decade, Uchida's insights are considered crucial indicators of the future direction of Japan's monetary policy. He reiterated that the Bank of Japan's position is to consider raising interest rates if the economic outlook improves. However, he also cautioned that the current risks related to the economy and inflation are skewed toward the downside, suggesting that core consumer prices might dip below the 2% mark at some point. On a more positive note, he did mention that there are signs of upward pressure on food prices beginning to emerge. This statement marks the first significant commentary from the Bank of Japan regarding its policy stance since the Senate elections on July 20th. Hideo Kumano, an executive economist at Daiichi Life Research Institute and a former official at the Bank of Japan, noted that Uchida's remarks did not introduce much new information, but rather reaffirm the central bank's existing stance. He pointed out that one of the key takeaways from Uchida's speech is that the Bank of Japan's interest rate policy remains unchanged even after the elections. Kumano also stressed the difficulty in making a definitive judgment on the trade agreement without a comprehensive understanding of its details. Despite the cautious tone from Uchida, the announcement of the trade agreement has led traders to speculate about a potential interest rate hike by the Bank of Japan before the year concludes. Market indicators, specifically overnight index swaps, OIS, are suggesting that there is over an 80% probability of a rate increase. The Bank of Japan is set to announce its next monetary policy decision on July 31st, coinciding with the release of a new quarterly economic outlook report. Uchida's recent comments have bolstered market expectations that the Bank of Japan will maintain the benchmark interest rate at 0.5% in the upcoming meeting.